Hello traders. In this video I will talk about cash index close, why is it important, and also about derivatives of the index that you can trade, something about gaps, something about pre-market low, pre-market high, and I'm making this video because I have received today one question. It says, how come the previous cash close is so important? It feels it helps a lot to know it, and I have profited a lot by just plotting that line on my graph, but why is it useful and what does it mean? So, trading stock market indices is a pretty popular thing to do. Those things are liquid and good markets to trade, but many novice traders really don't know that you can't really trade an index. Cash index is index that is tracking the behavior of stocks that are inside that index. So, for example, DAX has 30 companies, and a DAX index track those 30 companies. It opens when the stock market opens, it closed when the stock market is closed. Those kind of working hours are called regular trading hours, or RTH. This is the RTH session. Since you can't trade index directly, there are derivatives that you can trade. And the most important derivative for trading stock market indices are stock market futures. So DAX has his own futures, S&P has futures, Nasdaq has its futures, Russell 2000 has its futures, and every other market from well traded and big market has its own futures. You can also trade indices by options, and options can be on index itself, options can be on futures, and options can be on ATFs. And ATF is another derivative, a way that you can trade index, and ATF is behaving like a stock. You receive a dividend for it, and it is a favorite option for a longer time frame holders. They are going to hold ETFs because in that way they are going to get a dividend, and they don't have to think about rolling over their positions, because futures will expire every 3 months, and if you want to hold, you must roll over your position. And now we come to the CFDs, and CFDs are also index derivatives, or derivatives of many other things. There are CFDs on oil, on silver, gold, on whatever. So stock index CFD is, as any CFD, a broker products, and it is much less regulated than the futures, options, or ATFs. It is a way for you to trade a ticket, for you to trade smaller lots than futures. But it is less regulated, you will get more slippage, your fills is going to be worse than on futures, and it will cost you more at the end, because the commissions on CFDs are usually higher than on futures for the same size, for the same nominal size that you would like to trade. So DAX here has pre-market hours from 1:15 to 9 a.m., regular trading hours from 9 to 5:30 p.m., and after that until 10 o'clock is after hours. So futures looks like this, from here to here. We will use for CFD tradings pre-market low and pre-market high as values from futures, not from CFD brokers that are offering 24-hour trading, because futures have this pause between 10 p.m. and 1:15. There are no trading there. and there could be some differences. There it is the best for us to use before the market is open, to use pre-market high and pre-market low from futures, and then to adjust those values to this chart. So if this is going to be, a futures chart, then we will adjust this previous cash close to futures. DAX futures currently are 5 points lower than index. And note that CFD are usually tracking index. CFDs are the way for the broker to mimic cash index behavior with their product, with their CFDs. Okay, so why is this previous cash close so important? As I said, previous cash close means the close of the cash index. It means the close of the regular trading hours. It means the close of the stock market. And what is the difference when you're looking at charts? Because every of these instruments has its own charts. Let us observe one particular day on the S&P, because there is a good example here. This here is a daily chart of the S&P index, and this arrow here is pointing to the 8th of November 2016, the day when US President Trump was elected. And when you look at this candle here, this is the one that are in the middle, this small one in the middle, this is the cash index. Now, this is how it looks on futures. It has this huge tail to the downside, because the first market reaction was a sell-off. President Trump was elected in the after hours, where the US stock market was already closed, and you got this tail. And the same tail you have on the CFD chart, because CFD has the same trading hours as futures. You don't have the tail on the cash index, and you don't have the same tail on SPY, which is the ETF that tracks S&P. So these values, regular trading hour values, are the values that carry more weight. So this inside regular trading hours, from here to here, it's today's whole day. Now, because now it's like 3:20, we have a lot of trading to do to 10. But what happens here carry more value than here or here. What happens here, we can look that on DAX cash index chart. This is it. And you can also track gaps on that chart. Now, let's observe that same thing on futures chart. This is DAX futures chart. This dashed line here is prior close of the futures. This one I have plotted that manually. How? I know the DAX futures are 5 points lower than index. So I will look for index, and I will have this value, previous cash close. You see this, 10,891.79. I will round that on and say it is 10,892. And I will deduct these 5 points because DAX futures are 5 points lower, and I will plot this line here as a cash close. Note that sometimes there can be difference between prior future close and cash close. This kind of difference on DAX can be like 20-30 points even on some cases. Now look at this, look at the same picture on S&P. S&P, on the other hand, is one tick above its own cash close. So E-mini S&P futures currently trading one tick above cash close values. Look at the difference. This is the futures close, this is the cash close. And I said cash close, cash, regular trading hours carry more weight than after hour than pre-market. So cash close is something that is very useful for us to have on our charts. I didn't have a mentor in my life, but this is something that I have learned from one of my friends, and we worked together in a few trading companies, and he taught me the importance of cash close. And if you have cash close in confluence with the support or resistance zone, with another reference points like pre-market low, pre-market high, with some trend line or with Fibonacci retracement, then it is additional reason for you to take the trade or for you to use that reference point as a target. And I have like a ton of examples on my computer. There are literally hundreds and hundreds of examples how you can use cash close. Now look at this. This is examples from 2018, 2017. This is S&P. Small spring below cash close. Nasdaq. Bounce from cash close for long. This one here for short. NDX close like axis line here. Nasdaq, no, it is S&P, I'm sorry. S&P gap fill 4:20 p.m. It is of course Central European time. From platform here, prior close, cash close. Just touch of the cash close on Nasdaq. Reaction. In this case, usable for closing your trade long from trend line to the cash close. Cash close used as a target. Now here again, here again, here again, here again. I can do this all day long. I have hundreds of these examples. So cash close is very important because it represents the closing period of the stock market, of the regular trading hours that carry more weight than this or this. And that is it for this educational video. This is one of the educational videos, and I will of course make some others covering some of the good stuff for us day traders or swing traders to learn, and something that we can use many times. You can follow me on Twitter. Here is my handle, and here on YouTube I publish my daily recap videos and some weekly videos covering DAX and US indices. Thanks for watching. I wish you good trading and a good day.